Good morning, ladies and gentlemen, and a very warm welcome to Nigeria's financial crime risks pivotal role of microfinance banks. This is an ARMC Perspectives webinar brought to you in partnership with the National Association of Microfinance Banks of Nigeria and with Distia, financial crime software provider of choice for ARMC. We would beg your permission just to allow a couple of minutes for participants to join. There are many people who signed up for this event, but as I'm sure you also appreciate that sometimes people leave it till the last minute to finally sort of log in for the event. We are very happy today to have our keynote speaker, Mr. Muhammad Jiya, the Acting Associate Director responsible for planning and compliance at the Nigerian Financial Intelligence Unit. So many people want to be able to hear what our keynote speaker has to say. So many people are very happy to be connecting with the NFIU. So with that in mind, we just beg for your permission for us to give a couple of minutes for our colleagues from the microfinance banking sector across Nigeria to join as well. Thank you very much indeed. There are lots of people joining already. We have over 55 people already joining. So let's just give them a few more minutes to come on board. Thank you. Good morning. If you have just joined, a very warm welcome. We are just going to wait for one more minute for colleagues to join. As I said earlier, there were very many colleagues who wanted to join this event. So as a result of that, we want to be able to give colleagues a little bit of time to be able to log in and to join the event. So we will start at precisely 5 minutes past 10 with our opening remarks. Thank you very much. Okay, ladies and gentlemen, good morning. A very warm welcome to this ARMC Perspectives webinar event. My name is Saldus Jushu Sharif. I'm the managing partner of Africa Risk Management and Compliance Partners. We are a boutique risk management, regulatory compliance, and cybersecurity solutions company, providing consulting, training, and technology solutions to the financial services sector right across Africa. Today is a really exciting day for all of us at ARMC and on the ARMC Perspectives platform. A little bit about the ARMC Perspectives platform. It's a platform that provides a forum for financial services institutions from across Africa to come together to share ideas about risk management, regulatory compliance, and cybersecurity issues, to focus on knowledge sharing, and also to focus on capacity building. Many of our webinars, and this is the 6th of the webinars that we've done over the last 8 months, are focused on bringing new things and new ideas and new thoughts and new knowledge to the market that the financial services sector across Africa colleagues from the sector across Africa will benefit from. We are really very excited about today's event for a number of reasons. We're excited because it's the first of many events that we hope to be able to host in conjunction with our hosts today and partners, the National Association of Microfinance Banks. And we're very grateful to the National President and to the NAMB Secretariat for hosting us today. But we're also equally excited because we have present today as our keynote speaker, Mr. Muhammad Jiya, Acting Associate Director for Planning and Compliance at the Nigerian Financial Intelligence Unit. This is one of the first occasions, as I recall in previous conversations with Mr. Jiya, in which the NFIU has been able to engage with the Nigerian microfinance banking sector in this sort of one-on-one intimate sort of gathering with dedicated to the sector itself. So we're very excited about what Mr. Muhammad Jiya is going to have to share with us. On today's event, we will have a poll that is already running. You should be able to see the polling at the end, at the bottom of your screen. We would encourage you to participate in the polling. You will note that a lot of the questions are geared towards looking at your engagement and understanding your engagement with the NFIU. So that will be very useful for the relationship between the NFIU and NAMB sector members going forwards. We also have a Q&A section at the bottom of the screen, and we'll welcome you to take this opportunity to ask as many questions of the panelists as possible. We are also very, very happy to be able to welcome Mr. Helder Karapina from Dixon. I'm sorry, Helder, I practiced that again and again, but on the big occasion, I got it wrong. I do apologize. Dixon is a financial crime technology solutions company, very much at the leading edge of new technologies. And Helder will be able to tell you a lot more about what his company does and the products and services. The one reason why we're very excited that Helder is here is because we know that one of the challenges for microfinance banks is being able to access good quality, sensibly priced financial risk management solutions, technology solutions. So we hope that this will be an opportunity for you to learn more about Helder and his company. Today's session, we're going to focus on, firstly, some opening welcome remarks from the national president of the NAMB, Alhaji Yusuf Ahmed Yalesu. And then after that, we will hear from our keynote speaker, Mr. Muhammad Jiya, as I mentioned earlier. And then we will hear from Helder, who will tell us a little bit more about how technology is playing a significant role in the fight against financial crime risk, and particularly in the area of anti-money laundering. ARMC itself, as I said, we are a risk management and regulatory compliance consultancy. We focus on providing consultancy services, training, and technology solutions across a plethora of risks within the financial services sector. We would very much welcome greater engagement with the microfinance banking sector of Nigeria. And that is why we are very pleased and very happy about our relationship that we're building with the NAMB in order for us to be able to provide direct support to the sector. With time already against us right from the very beginning, as we started a little bit late, I would like to make the move to now invite, firstly, our welcome remarks from Alhaji Yusuf Ahmed Khalesu, who will welcome us all to this event. Sir, you are most welcome. If you can take your mic off mute, and then you can go for it, sir.
Thank you very much, Mr. Sharif. A very good morning to you and keynote speaker and my dear colleagues. It gives me a great pleasure to welcome you all to this awareness webinar titled Nigeria's Financial Crime Risks, Pivotal Role of Microfinance Banks. Now, the significance of this subject matter cannot be overemphasized in this critical period of our economy and national life. Now, with the rising insecurity in the country, microfinance banks' compliance to anti-money laundering and combating the financing of terrorism is now a significant task for our sector in order to safeguard the financial integrity of this nation. We must all be ready to contribute to the fight to sanitize our cyberspace and financial system. And we are glad to have with us as keynote speaker, Alhaji Muhammad Jiya, an associate director at the Nigerian Financial Intelligence Unit, who will be giving the perspective from the regulator's point of view on the importance of microfinance banks compliance through deployment of technology, capacity building, and improved surveillance. The NFIU is working assiduously to protect our financial landscape and ensure that we have a safer environment for financial growth. With the recapitalization plan of the sector, the importance of strong risk management to the survival of the microfinance banks and the sector as a whole, especially in the tackling of cyber crimes, is key to attracting serious international investors into our space. Therefore, microfinance banks must observe high sense of due diligence as all sorts of investors in courts. We want to take advantage of this period to bring in their sludge funds into the financial system. We are happy to partner with our African Risk Management Company, ARMC, being represented here today by Mr. Helder Karapinha, who is the MD of Dixon, to deliver a step change in the adoption of risk management, regulatory compliance, and cybersecurity capacity building, education, and technology. Our sector has always been regarded as the weak link in the financial service industry. However, today, with the adoption of the BVN by our members, that's the bank verification number by our members, and with this webinar, which is the first in this series, will afford us the opportunity to begin to rewrite the narrative for our sector. It is my sincere belief that we will all have a fulfilling engagement in this webinar. Thank you all, and I wish you a very fruitful participation. Thank you very much.
Thank you very much, Alhaji, for your warm opening remarks, and we share your sentiments fully, sir.
Thank you.
We would like to now move on to our keynote speaker. Our keynote speaker, Mr. Alhaji Muhammad Jiya from the Nigerian Financial Intelligence Unit, has a long history in the financial crime regulatory landscape in Nigeria. Mr. Muhammad Jiya is also a technologist by training and a technologist by education, and his experience has very much been at the forefront of looking at how the use of technology and data can help in the fight against financial crime, not just in Nigeria, but across the whole of Africa. We very much look forward to, we welcome you, first of all, Alhaji Muhammad Jiya, and we very much look forward to hearing from you and hearing the perspectives of the NFIU to this audience. Without further ado, I would like to welcome you, Alhaji Muhammad Jiya, to take the stage. Thank you.
And thank you, Alhaji Gelesu and Sadis, for the introduction and the welcome address. This is a great opportunity for us at NFIU to be here to present to you what we are doing at NFIU and why the microfinance banks are so critical to our tax. So without wasting much of your time, I know Mr. Saldis Sharif has given us a very tight time frame, and I will try as much as possible to make sure that I'm within that time frame. As we all know, Nigerian Financial Intelligence Unit is a critical agency of the government that is saddled with maintaining and ensuring the protection of financial system. So in the outline of this presentation, what we want to quickly do is the current state of financial crime, AML, CFT challenges in Nigeria, the impact of pandemic on financial crimes in Nigeria, and the role of microfinance banks in the MLCFT regime. Then the overall rules of and responsibility of NFIU in the MLCFT regime, status of the current status as far as our record, our database is concerned with respect to reporting by the MFBs, that is microfinance banks. And we'll now wrap it up with the pivotal role of technology in the fight against financial crime, how microfinance banks can leverage on the financial, the technology to be able to address anti-money laundering and counter financing of terrorism. So as we all know, this picture is not new to all of us. From the left-hand side, we see how corruption, money laundering, and other related predicate offenses have turned our own citizens to. These are typical environments in the Nigerian scene. In a country that has, you will be hearing a lot of millions and billions are being moved out of the country, laundered in different ways, and here we are, we look at people living in abject poverty. So it is something that is so critical that we need to address. Again, we also have kidnapping for ransom, violent crimes, armed robbery, and banditry has taken the day. Everybody in Nigeria now is very afraid of going back to his village. Traveling from one point to the other now has become a very big challenge to us in the country. Terrorism has also become the order of the day. We don't even know what is next because the terrorist activities are becoming more daunting than before. So, and this is also fueled by the proliferation and financing of armed proliferation. So all these put together put the nation in a critical situation that will necessitate all the stakeholders, the reporting entities, regulatory entities, and law enforcement agencies, as well as security agencies, to go into signage to be able to see how we can cope. Because the major way, the only way which even the Financial Action Task Force, the global body against money laundering and terrorism financing, in their report, what they say is that the only way to be able to stop terrorism and all these violent activities is to cut off the finances of the sponsors and the facilitators. So that can only be done through the collaboration of reporting entities and the law enforcement agencies and regulatory bodies. So during the COVID, there's been some challenges we have that as far as financial crime is concerned. The COVID-19 has increased vulnerability of certain individuals because people were forced to do their transactions online and most people are not used to it. In-banking operations becomes highly restricted. Even during the lockdown, it was just virtually not even possible. So this now forced people to now begin to use alternative means, online connectivities, which is prone to a lot of fraudulent activities. Public health concerns have also resulted in postponement on some on-site inspections. Like at Nigerian Financial Intelligence Unit, apart from looking at the data that the banks, the reporting entities sent to FIU, we also do a check, on the spot check, that is on-site inspection of financial systems, or financial institutions by the regulators. Pandemic has already put a stop to this. So this is also another challenge we face during the pandemic. Voluntary and government mandating quarantine, stay at home has reduced the in-person activity and increased online banking and remote transactions. The increase in remote this has also made financial institutions to comply with MSCFT requirements related to customer identity and verification. Many times, People now hide behind the keyboards, the computer, to do a lot of transactions, compared to when you have in-banking operations. So that is also another challenge. So by and large, COVID-19 pandemic has exacerbated fraud, which remains the forefront of money laundering across the nation and even abroad. So it created opportunity for criminals to target certain population, those who are economically insecure or are exploitable while engaging on online transactions and activities. More online activities during the pandemic has resulted to more opportunity for cyber criminals to target individuals and businesses. So that is the impact of the pandemic. Now, what is the role of microfinance banks? If you look at the CBN policy that brought up the microfinance banks, the policy was made in such a way to make financial services accessible to large segment of potentially productive Nigerian population that will otherwise have little or no access to financial services. Microfinance banks target clients which include the following groups. That is economically low people, are low income, low household, unbanked, unserved people, vulnerable groups such as women, youth, physically challenged, and micro entrepreneurs and subsistence farmers. Now, because this is the target, the main challenge for financial service provider in complying with these measures arise from requirement and undertake customer due diligence. Because these are specific and special set of people, the challenge now becomes a very big challenge to the microfinance banks. Because people hide under these poor and vulnerable people to now begin to perpetrate financial crime. Because for us at NFIU, we have seen analysis where most of the funds are moved to support terrorism, or funds are laundered using the non-governmental organizations. And you all know that NGOs have infiltrated into microfinance industry. Also, remittance services makes this thing vulnerable to exploitation by terrorists. Non-governmental organizations are considered to be conduit of terror funds and money laundering. So this is the critical role. Complying with AML safety regulation by microfinance banks becomes critical based on this fact. Now let's come to FIU. FIU by the NFIU Act is a central agency, as you can see from the diagram, a central agency that is mandated to receive report from different reporting entities, which I will show you in some slides coming, and also from designated known financial businesses and professions, and even other reporting entities. Then we process these reports, liaising with our own counterpart FIUs all over the world. We belong to an Egmont group of FIUs, which have 167 member countries. And we also have the watchdogs, the Financial Action Task Force is the global body, and we also the regional FSTF style body, FATF body, that is GIABA, which is for the ECOWAS region. Now, once we are able to analyze this report, based on whatever we have found, if there is any suspicion or reason for suspecting the transaction, we can forward it to law enforcement agencies, anti-corruption agencies, or back to regulators. Sometimes it may just be to regulators that these are the flaws we have observed in this area. Can you please come up with a regulation to protect the financial system from this exploitation that we have just observed in this specific sector or area? So that is, in the global general view, what the FIU is all about. Now, in terms of the brief of what FIU is, it's an independent and operationally autonomous agency in the discharge of its duties and performance of its function. For the purpose of institutional location, the unit is domiciled in the Central Bank of Nigeria, but it is fully autonomous. It also serves as the Secretariat of Interministerial Committee for Anti-Money Laundering and Counter-Financing Terrorism Coordination Activities. So we have different agencies, Central Bank, Security and Exchange Commission, a lot of other stakeholders, including the anti-corruption agencies, law enforcement agencies that are members of the Interministerial Committee. NFIU serves as the Secretariat. The director of NFIU is also the GIABA national correspondent. There is a regional body. So in the national correspondent for Nigeria is usually by default the director of Nigerian Financial Intelligence Unit. FIU, according to Terrorism Prohibition Act, is also the Secretariat of the National Sanction Committee, issuing sanctions to regulators, to reporting entities. The Secretariat is at the NFIU. Nigerian Financial Intelligence Unit is also the current headquarters of West African Financial Intelligence Unit Forum. The West African FIU's Forum has last year, precisely in February, in our meeting in Senegal, they have unanimously adopted and resolved that they should move the headquarters to Nigeria. So we lead the other FIUs in the West African region. We have been member of the Egmont Group, 166 Egmont Group, since 2007. And we are at FIU, we are currently mentoring Liberia, Gambia, and Sierra Leone to join the group. And we are also one of the 3-member Egmont Group of FIUs, along with Canada, Netherlands, to work on the joint digital transformation of FIUs. In terms of the core functions of FIU, the law mandates us as a mandate that we should institutionalize best practices of financial intelligence management in Nigeria. We should strengthen the existing system in combating money laundering and associated predicate offenses, and also make provision for NFIU to share information with other institutions and regulatory bodies. And the core functions that we do is to receive reports from the reporting entities. It may be currency transaction report. I will explain that in the next slide. Then once we receive this report, we analyze it. The analysis can be tactical, maybe looking at individuals, or operational for the purpose of providing a report to help the law enforcement agencies, or strategic, just to look at the pattern and the trend so that we can advise government or advise law enforcement agencies on what particular action that need to be taken, or for the government to be able to come up with a policy that will protect the financial system. So once this report is ready, we disseminate it to appropriate authorities. Now, in terms of the powers of the unit, NFIU has the power to collaborate with regulatory authorities, law enforcement agencies, anti-corruption agencies, security agencies, and self-regulatory bodies like NAM, for instance, the association. We can collaborate directly with the association in combating money laundering, terrorism financing, proliferation financing, and related activities. We also have the power to review anti-money laundering and counter-financing of terrorism measures on a regular basis. We also have the powers to direct prompt of monitoring and immediate stop of financial transaction. Like now, if we observe there is a movement of money into a microfinance bank, NFIU has the powers to order that that transaction should be stopped, and until the investigations are done and the source of that fund is clear before we now lift the lien on that account. Now, number 4, we have the powers to request for or collect any other information that is deemed necessary in any organization, be it a reporting entity, be it a government national database. With that, we are able to connect to a lot of national databases. In addition to this law, we also have the presidential consent, written and signed, to be able to connect to any database that we found there is any information that will help us carry out our function. We also request for additional information, apart from what they report, that the reporting entity may send to us. If we deem it fit that there is additional information we still require from the institution, reporting entity, we will just get it. We also enter into a MOU with local authorities and foreign FIUs. Now, what are the reporting entities that we are really dealing with? Microfinance Bank is just one of them. We deal with the money deposit banks, development finance banks, merchant banks, primary mortgage institutions, primary mortgage institutions, bureau de change operators, even non-interest banks, discount houses, finance companies, capital market operators, insurance company, and even SROs as well. So this is what we do as the reporting entities we have. These are the financial institutions. But the law, the Money Laundering Prohibition Act, also mandated designated non-financial businesses to also send reports to the FIU. These include the audit firms, car dealers, casinos, chartered accountants, civil society organizations, clearing and settlement companies, hotels, jewel dealers, legal practitioners, dealers in luxury goods, supermarkets, and tax consultants. These are all individuals that this is to make the money laundering fight as a holistic approach, because it has been known based on experience that many people want to launder money, does not move these monies to financial institutions. They prefer to put these monies in estates, in buying vehicles or buying jewel or luxury goods just to launder their money. So that is why these sectors are also expected to submit reports to FIU. Now, what are the type of reports that FIU receives? We have 6 basic types of reports. Currency transaction reports, that is 5 million for individual, 10 million for corporate bodies, according to Section 10 of the Money Laundering Prohibition Act. Then we also have the foreign transaction report. These are transactions that are done in foreign currency, equivalent of $10,000 US, or any equivalent in any currency. It may be Great Britain pound or Japanese yen or American dollar, or it may be Indian rupees, Saudi Arabia riyal, South African rand, any other type of currency. Equivalent of $10,000 must be reported to FIU. We also have suspicious transactions. These are transactions that are not based on threshold amount, but the surrounding, the things that surround that transaction. Like now a customer comes to the bank and decide to issue 3 different checks. Each check is 4.5 million, 4.5, 4.5. Ordinarily, if he has written one check, it could have been, it will reach reporting threshold. But the customer is trying to evade reporting. So he now begins to split the transactions, structure the transactions. So the bank is supposed to gather those things together and report it as a suspicious transaction. Then we also have suspicious activity report. This is when the transaction has not actually taken place. For instance, a customer comes to the bank, he has already issued his check to the teller, and at the end of the day, the teller now asks for means of identification. That, sir or madam, can you give me means of ID? And unfortunately, the man now said no. They should give him his check back. He's not ready to do the transaction again. And he collects his check and walks out of the banking hall. At that time, it is a suspicious activity that the bank is supposed to report on that account, despite the fact that transaction has not taken place. So we also have cross-border report, the report that the forms you fill when you are declaring currency as you are moving out of the country or coming into the country. It's also coming to FIU. Then we have additional information that we always request from the reporting entities. So to collect this report, what NFIU did was to provide platforms for collecting this report from the reporting entities. We have a GoML reporting platform. This platform provides the banks and the reporting, all other reporting entities to submit secure electronic delivery of report, being this type of report that I earlier mentioned, from the reporting entities to NFIU using a schema and through a web form. You may just type it if you don't have much. But if you have even much, you can pull it from your core banking solution and upload to our portal. Then the law requires that if a reporting entity within the week, 7 days, there is nothing to report based on the transaction that you have, the law expects you, the reporting entity, to submit a new report telling NFIU that within this week, there is no transaction that has met the reporting threshold in our system. So that is to fulfill righteousness, which most reporting entities are not doing. So in that case, you are also violating the law. So all licensed microfinance banks operating in the country are expected to register on GoML and the new reporting platform. Once you have report to report, you submit it through the GoML. If you don't have any report, you are supposed to submit a new report through the new reporting platform. So what are the microfinance doing? This is where we are very, 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 very worried. And we look very sad. We have 975 licensed microfinance banks. This is according to CBN record. The record with CBN shows that we have 975 microfinance banks registered in Nigeria. But as we speak, only 20, which is 2% of them, are registered on our GoML portal. And we have seen a lot of huge inflow moving from money deposit banks to some of these microfinance banks. So why is it that they are not even registered on the GoML, talk less of even reporting? To only 20 out of 975 have registered on GoML reporting portal. This is not a good outing for the banks in this sector. And even the new report, where you expect that at least, even if because by the nature of their operation, they may not be engaging too much on high volume transactions, fine, you're supposed to also have registered on the new reporting portal so that to obey the law, the requirement to fulfill the requirement of the law, you will have to update, to send the new report start on the new reporting portal, leaving out 86% are still not on that portal. So this is something that is very critical to us. Now, in conclusion, what we are trying to do, sorry, there is a mixed up with later. So what we are trying to do is remittances. We want to make it very clear that based on what we said at the introduction, remittance services of microfinance banks remain vulnerable to exploitation by the terrorists, and NGOs are considered to be potential conduits of terrorism, movement of terrorist funds, and money laundering. From the record available at NFIU, which I just shown in the previous slide, the sector is not doing well with respect to compliance with anti-money laundering and counter-financing terrorism of guidelines. And this is why we are happy. I said in the introduction that to us, we have been looking out for opportunity to even talk to the sector. We want to go out before the COVID, but unfortunately the COVID issue has limited what we want to do. We have a whole sector it is a unit in our department that focus on the microfinance banks, and they are really, really not having the report. So the National Association of the Microfinance Banks need to do a lot of sensitization of its members to comply with the anti-money laundering and counter-financing of terrorism. And we at the NFIU, we are ready to provide technical support, training that you may require. As we speak, that is why you see I made a mistake of APCON there. From next month, by June precisely, our staff will be meeting at zonal offices of Association of Bureau de Change, because they are also vulnerable to the money laundering. And we are sensitizing them, telling them how to comply with the law. So in wrapping up my presentation, if you now understand the type of reports that you are supposed to send, most especially the ones that are suspicious, which is very, very important. Suspicious transactions can only be fished out when the microfinance banks bring in technology. Because, for instance, if the bank has 3 branches, one in Lagos, one in Abuja, and one in Kano, for instance, and somebody that is trying to be so smart decided to use, it may be 3 branches in just one location. He now used different aides that he works with him to go to these branches to make deposits or make withdrawals. There is no way it is humanly possible that at the end of the close of business, you'll be able to know that that customer has done a structured transaction. But with artificial intelligence, machine learning, and cloud computing that are available today, the system will be able to fish out, just run a background check, and will be able to fish out all the suspicious transaction reports and even the currency transaction report that meet the required threshold. So this is the best way. So in today's banking environment, the potential for financial crime is becoming constantly increasing. Microfinance bank must fight back this by using the talent and tools needed to counter the activities. Adopting technology, use of technologies such as deploying AML solutions will surely help to facilitate the possibility of being able to detect potential money laundering and terrorism, financial and other financial crimes. So in a nutshell, this is the position of FIU, and this is the critical role and the situation that at the moment, as we speak, the microfinance banks are in as far as our record is concerned, which we are hopeful that after this webinar, we will be able to do further engagement. We are ready to also discuss with your technology providers to tell them our own requirements. We have done that with the Money Deposit Bank, done that with other sectors. We will tell them what is the requirement of the law and how they can implement solutions that will address those requirements and thereby helping you to meet up with the regulatory requirements. Thank you very much. Sardis, I hope I have not taken beyond my time. Thank you.
Alhaji Muhammad Jiya, thank you very much indeed, sir, for a fantastic presentation. If I can answer your question directly, no, sir, indeed, you have not taken longer than your time.
Thank you.
I think I speak for all the people on this call, whether you are from the microfinance banking sector in Nigeria or from many other parts of West Africa. I can see many other people from other parts of West Africa here. And even those of us who are the professionals who are working in the sector all over Africa. That was a fantastic presentation, a very good insight into the landscape from a financial crime perspective in Nigeria, a very clear setting of the expectations of the NFIU on the microfinance sector, but also on many other sectors, such as the payment service provider sector, the fintech sector that's about to explode in Nigeria in such a significant way. We thank you very much indeed for your time and for your insights. And one of the things that you mentioned, sir, is really, really important. As you said, in order for us to be able to win this battle against financial crime, and in particular around money laundering, the use of technology is pivotal. It's no longer possible for us to use pen and paper to be able to overcome criminals that are using high technology means in order to be able to perpetrate their crimes, as you said there, through the cyber crime and so on and so forth. So therefore, I'm very pleased to be able to present to this group today, Mr. Helder Karapina. He is from Dixon, and Dixon is ARMC's partner in the delivery of financial crime technology solutions. The use of financial crime technology in the overcoming of AML, fraud, and CFT in terms of transaction monitoring and so on, and even transaction reporting, as Alhaji Muhammad Jiya has shared, is pivotal. So Kelda, with no further ado, I want to be able to hand over the stage to you to tell us a little bit more about the role of technology in the fight against financial crime. Thank you very much.
Thank you, Saldis. I'm sharing here my screen. I hope everybody is seeing it. Well, as Saldis said, my name is Alhaji Muhammad, and I'm the managing director for Dixon. We at Dixon, we are a financial crime compliance specialist company based in Lisbon, Portugal, and we operate mainly in Europe, Africa, and Asia. It really is a great pleasure to be here today with all of you and to be able to share our thoughts and experience on the financial crime compliance matter, and specifically on the anti-money laundering. So, what is the financial crime risk and the management today? We have two points that we must consider as we are operating today, and it's the strategies and the silos. Many of the institutions operate without a clear top-down vision of the principles for their financial crime compliance and anti-money laundering function. Strategies are more responsive than proactive, are more based on last year's problems than predict or anticipate next year's issues. General focus on satisfying regulatory and audit expectations rather than being oriented toward detecting suspicious activity in the most effective manner. One other point that we must consider here is that today, most organizations are often arranged in silos. This means that leads to a suboptimal interaction between the groups. Lacks of collaboration makes it difficult to ensure that the dots are connected among regional, business aligned types and functional groups. Given teams may also have gaps in the business knowledge and technical skills necessary to detect and interpret sophisticated threats and topologies. This is how FCC works today, or should work. We should have it like imagine a house with a good foundation. We should have the model validation, model risk management, data visualization and decision support, data and technology. On top of this, we will have our AML lifecycle, the onboarding, knowing your customer, periodic and event-driven reviews, client screening, payment filtering, transaction monitoring, and client exit management. With top of this and regulating all of these, the organization and the governance of the company. These risk appetite and objective settings. So we look across the FCC AML lifecycle, we observe two significant challenges. The first challenge is how to accurately detect activity that represents higher risk, such that there is not undue noise caused by generating alerts in benign cases, and conversely, that truly suspicious activity is not missed. The second challenge is how to investigate alerts cases in the most efficient and effective manner, such that all the right information is collated and objective and consistent decisions are produced. Existing detection used in FCC AML are often based on simple rules or models that do not fully leverage available data, more advanced statistical methods, or the latest technology advance. So these are, in fact, the two challenges that we must have. To have a very precise and accurate detection, and then to treat the true positives in a proper way. Case management. Case management is also quite important. Investigations and case management workflow is an area in which there is often underinvestment. Cases are addressed with limited prioritization, with results in the same resource allocation to case files regardless of associated risk. The additional, while some efficiency and effectiveness metrics may be used for monitoring core process, few financial institutions are regularly leveraging the results from previous cases to upgrade their alert generation rules or adjust their case idling practice. At the foundation are the data and systems capabilities which support all analysis and process. Unfortunately, data is rarely integrated across multiple sources in the bank. This negatively impacts the ability to detect events that are made up by multiple activities, which collectively are suspicious. So, embracing a new approach to financial crime risk management. This is the right steps in our perspective. What we have today. Today, we comply. Most of organizations are just complying with the regulatories, with the laws, with the internal obligations, regulations, and procedures. What we need to do is to integrate and to move to this next step, which is further integrate the financial crimes program enterprise-wide. As financial institutions mature in their compliance approaches, they typically seek to break down organizational silos in favor of a more centralized approach. This change impacts their governance, structure, reporting, monitoring, testing, risk assessments, investigations, screening, technology, and data needs. What we are aiming to in our days already is to automate, to further automate the financial crimes compliance activities for even a greater consistency, efficiency, and agility. At this stage, financial institutions seek to further automate rule scanning, negative news, sanction scanning, due diligence, monitoring and testing, risk assessment process, surveillance, investigations, workflows, reporting including development of dashboards and data governance. And it's a lot to do, but there's a good way to do it. So for the next generation solutions, we have 4 benefits that we consider it very, very important. A more accurate identification of suspicious activity and a better response to requests from law enforcement, lower costs and greater effectiveness by eliminating false positives and optimizing often manual investigation process, higher customer satisfaction and increased revenue by streamlining client onboarding and product approval process, facilitating rapid and secure transactions approval and avoiding unnecessary de-risking. Last but not the least, more rapid and comprehensive response to new regulatory requirements. Transformation of the financial crime compliance anti-money laundering function will offer significant benefits, and many banks are starting to take the right steps. It is important to define the future state and the key steps required, including the new, more advanced models and digital tools that will enable improvements in performance and in the evaluation of the various functions and mandates that will render change achievable and sustainable. Banks should not wait for perfect starting conditions before beginning. It is possible and arguably necessary to take significant steps, even as the critical assets and skill sets that will enable the change are being put in place. This is very, very important. We must have ourselves ready for the future, moving through the future, but let's not wait to have the perfect conditions to start fighting money laundering or terrorism financing. We should start already. So the road to the future. In our days, we are at a point that we often work with incorrect data, many false positives, and an efficient client lifecycle management. How can we increase the efficiency, increase the effectiveness? We should move to a short-term optimized levers, data cleaning, structuring automation, and capability building. Move to another level, which is the structural of optimization levers, detecting model upgrades, process re-engineering, organizational effectiveness. And the last stage, next generation levers, artificial intelligence and machine learning. This is the future, and this is the good way to help us on FCC. We have today this information about the customer. We have the sanctions lists. we have the transaction data. This is all the information that we have today. What we do transaction scanning and screening. We do customer sanction and screening. And all these, it's some alerts. With self-learning machine learning algorithm implemented, we can work with all this information, work several scenarios, work with some mathematical models, and to evaluate all this data in a much faster and effective manner. Then we will have true positives escalate the alerts, and we have false positives that close the alerts. DCS is Dixon compliance solution. So it's our solution for financial crime compliance, namely for anti-money laundering and countering terrorism, financing terrorism. So FCC technology of the future is already available today. These are the good news that I bring to you, is that we already have these possible in our days. So I have here a very short schematic that shows you between what we do in the manual way and with effective tool like ours. So we have the transactions and we have this data for the transactions. We can automate the data. So we automated data aggregation, and data processing is improved data quality. We also data scientists to develop more effective scenarios. And we go for a transactions database. And here on the level 1 and 2, we are in the level of alert review and investigation. We can also have manual workforce, but we also have digital workforce. And the advantage of having digital workforce is that artificial intelligence, machine learning to suggest closure of false positives. Advanced statistics to identify patterns in alerts. And robotics, automated case, file, assembly, and visualization. So we are in the level of having suspicious activity. We can again have the manual workforce or have a digital workforce. With a digital workforce, we automate quality control checks for completeness. And we automate filling of suspicious activity reports and additional internal reports. And we can communicate these suspicious activities through the SARs to the due authorities in a much more efficient and professional way, and even with less effort from our side. So, putting the pieces together, clear alignment between overall helps to optimize the financial crime compliance functionality. What we have here is what are the variables in our days: a business operation, information technology, IT, governance, risk and compliance, and the financial crime compliance. We have strategy, process, people, and technology align with each other and supporting all each other. This is how we combat financing, terrorism, and anti-money laundering. Our solution. So we do have a solution here at Dixon for these issues. The features of our solution in a very, very fast way, and just as highlighting, we can do the monitoring of the client behavior. We do link analysis, links of relationships, statistical dashboards. We have the case management. We do transaction statistics, transaction rules, risk analysis, and automated alerts. Why DCS? Well, because it's compliant, ensures compliance with the requirements and regulations in force. It's accurate. We build on and precise behavioral models based on artificial intelligence. Case management, quite important. We do know your customer, we do know your transaction and due diligence in one application. This is in fact a very great advantage of our solution. Everything is integrated in one application. It's adaptable, customizable by means of parameterization and or deployments by extensions. We know by experience that big commercial banks work perfectly with it. Small financial institutions also work great with it. It's a question of adapting to your needs and to the needs of your business. And then it's user experience. We have a quick adaptation to the tool by the user. So having here a resume of what I have just shared with you all, very important to change our strategy, start to think about the future, avoid silos organization. It's very, very important for AML to have the complete picture and to have all the areas communicating each other and sharing the information. As long as you have a lot of information, a lot of data, very, very important to treat it well, to avoid false positives, to concentrate on the true positives, and to do a good case management of all these alerts and to report to the authorities. Is very, very important to take the process to the end and to report it to the authorities. Then it's a matter for the authorities to take the legal actions they need to do or the investigation that they need to do. But on our side, on our financial institution side, we have done our part and our good part to counter this problem. I can also tell you that you can count with us, Dixon, to support you in this matter. And it was really, really a pleasure to share our thoughts with you. And thank you very much for having the time to listen to me. Thank you.
Felder, thank you very much indeed for giving us that really good insight and overview of the DCS platform. As we have all concluded and as we see time and time again, what's really essential in the fight against financial crime is to be able to have technology solutions that enable you to move away from false positives, as we were talking about, to really real suspicious transactions. Alhaji Muhammad Jiya mentioned that as well, that it's all about making sure that you can find out of all the hundreds and thousands of transactions that the financial criminals are trying to hide, whether it's through money laundering or any other means, what are the real ones? And the use of artificial intelligence and new intelligent technology can make the whole process much, much easier. I think it is also important in our discussions with the NAMB, the NAMB Executive Secretary and the Head of Compliance at the NAMB, some of the challenges that have been highlighted by the NAMB for the microfinance banking sector in Nigeria around technology is that the big technology companies don't cater for microfinance banks. They always want to make big technology solutions that cost way above the means of microfinance banks. I think one thing that I can say with certainty in working with DCS is that it is an organization where the technology solutions can fit different sectors, whether it's in terms of the cost of the solution, whether it's in terms of the usability, the adaptability. So they come highly recommended to the NAMB and the microfinance banking sector. They have special products that are specifically designed to suit the microfinance banking sector. So I think anybody who is interested in being serious about using technology with the FCC, their financial crime compliance, DCS by ARMC is the very good way to go. Well, I want to be able to hand over to my colleague, Ruth Magona. She is the Chief Operating Officer for Africa Risk Management and Compliance Partners. Ruth is going to be curating the time that we have for Q&A. I know she has already told me there are so many questions. So Ruth, I want to hand over to you to handle the Q&A of this event. Thank you very much. The stage is yours.
Good morning. He's right. We have got a lot of questions this morning. So I don't know if you can see the screen, but I thought we'd start with the ones that we actually have on the questions and answers section of this webinar. And the first one is from Eddie Orok, which says, what has been the major reporting challenges associated with the microfinance banks, and how can these be improved through through this collaboration? And I think this is a question for Mohammed. I wonder if you can pick this up and see whether or not you can give us a concise answer for it. Thank you. Hello? You need to unmute.
Okay, what is the question again? Sorry.
Okay, I will just read it out for you again. What have been the major reporting challenges associated with the microfinance banks, and how can these be improved through this collaboration?
The major reporting challenges with microfinance banks is not specific to the microfinance banks. It cuts across all the, even the big money deposit banks also have the same challenges. One is that NFIU has a reporting format that the report must conform to. There is a schema, it's called a schema, which identifies what, if you are reporting your customer, what are the minimum information you need to report. If you are recording, if it's the customer is a corporate entity, what are those things that you report? And if you are reporting a transaction, what are those things that is expected? Like now, for an individual, you must give us his first name, last name, means of identification, telephone number, address, and those key information. Many a times, some of the banks, not even only microfinance bank, they don't keep this record on their database. They keep it in physical files. And NFI report the schema without this kind of information, it will not validate with our reporting schema. So they'll find it difficult to report. So that is, it is in this place that they have to work together with their technology vendors, just like Mr. Helder has presented, so that they provide a platform. Sometimes what the other reporting entities do is that they have to do a stopgap, something that allows you to populate all the things that are required for you to be able to submit the report. So that is the major challenges that are there. But engagement matters a lot. If you are suffering in silence, it's a challenge. These are things that once you engage with us and vendors, sometimes you may not even know the language we are speaking. In terms of technology, that's what I mean. So if you bring your technology people, we will talk to them that this is the requirement. They will look at your own database and see how you can meet it up. That's it.
Okay.
So that is how that is done, and that's what we are doing to address it. So we are very open for even a technical session with the association, the operators in the field, and also with the vendors that they may likely work with them.
Okay. Thank you very much. So what I'm getting is that whatever the solution is, it's best if you come talk to yourselves before we come up with some solutions. And Helder would be a good place or a good person to help us come up with some solutions that kind of like have a technical solution for reporting. Is that right, Helder?
Yes, of course. Yes, exactly.
Brilliant.
It's very, very important to deal with the information that we have today, to be active and to be proactive. And with a good management of that information, it's to report it. It's very, very important to report it. Then, as I said, then the authorities know what to do with that information and to what are the next steps.
Right. I'm going to jump to a question on chat because we have quite a few on there as well. What has been the major, is it possible that we can get the National Association of Microfinancing Secretariat to receive exception reports from NFIU to enable us to monitor our members? Mr. Caleb, would that be something you'd be able to address? Hello?
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 No, you can't.
I said, let me get the question again.
Okay, sorry. Is it possible that we get at the NABA Secretariat to receive exception reports from NFIU to enable us to monitor our members?
Well, on that note, I may not be able to answer it rightly. With what Mr. Jiya have said, we will try to see how we collaborate, we link up with them to see how they can assist us for the benefit of our members. So if our members have challenges, we can now relate to them so that we now solve the problem of our members. I think that's what I can say there, because I may not authoritatively respond on that. If Mr. Jiya can assist on that, if they can give us the authority, we should be able to work around it. is to collaborate with them.
Okay. Mr. Jiya, would you like to? You're on mute again, I'm afraid.
Thank you very much. Just as I said clearly, we always like to deal with SROs, self-regulatory bodies, and even associations like yours association. It makes it easier for us. By the time we tell you that this is what is happening at your sector and this is what you need to address, you can cascade that information to all your operators who will now comply. And if there is any need at any point in time for us to engage them on a larger scale, fine. We are always very ready, because the report that comes from your sector is what is key to us. That is our food. That's what we eat. That's what we analyze. So we are always ready to make sure we work with anybody or any organization or association that will help us get this report coming. Because the way what we are facing now, we want to we ensure that we have a holistic approach so that our intelligence will be credible. Because if somebody decided to avoid the money deposit banks, and we are not getting reports from the microfinance banks, BDCs, and other financial institutions that are not being targeted, then it will be a challenge for us. It will be a weakest link, which will be a problem to us. So we are very, very open to give you information as far as it is. Even now, after the meeting, you can approach us. We can even give you the list of the ones that are registered and the ones that, so that you now know, even the ones that has ever submitted reports. Some have registered, they have not submitted. All these things we are ready to share with the association, just not as a punitive measure, but just to make sure that we work together so that we can improve this country and take ourselves out of the mess we find ourselves. Thank you.
Thank you very much. This question I'm giving to Alhaji. The question is, are there measures to curb financial crimes involving crypto, as we have been receiving reports of some microfinance hacks and stolen funds moved to the crypto in Nigeria? Hello, Alhaji Yusuf? Alhaji?
Okay, thank you. When you say Alhaji, there are two Alhajis, I think.
Oh, I'm sorry.
I didn't know which of the Alhajis you're referring to. Anyway, talking about the crypto, it's an emerging trend in the system, and it's pretty new and a little bit difficult. But for me to hear that microfinance banks are getting involved in that, I think it's not right. Our members should not, because I know even the central bank has distanced itself from all these cryptocurrency things and Bitcoins and the rest of them, because these are things that you cannot trace. You cannot put faces behind transactions. These are things that are done online, and you don't have trace that you can follow. So it will be difficult to report. But since you've mentioned it, and somebody that is asking the question, it means maybe somewhere somebody is trying to do it in the microfinance space. I will advise that we don't do that. And as soon as we get our members to register, because from the statistics Alhaji Jiya has given us, just 2%, I think that is very, very dismal. That is it's really worrisome. We will encourage our members to register, not only register, but also to be reporting. Okay. Now, by the time people are not hiding and are reporting activities, I think this question that you just asked will be, will come to light. But only that there are figures that will be seen, and we will, place names, faces to it. That is my understanding of the cryptocurrency, activities. But I don't know if Alhaji Jiya, the other Alhaji, can add to what I just said. Thank you very much.
You have done, we have said it all. What we want is reporting, because at NFIU, we have a whole department in charge of virtual assets and cyber intelligence. We have been receiving reports, despite what is happening at the regulatory side, CBN is prescribed and all those things. Up to us, we know that these transactions are happening in the system, and the reporting entities are reporting it to us. And we are analyzing it. We have acquired tools that will be able to even check the dark web, do the analysis of all these virtual asset and cryptocurrencies related transactions. So what you just said is capital. What the bank is supposed to do, any microfinance bank is to do, is to make sure that you protect yourself from because you may be sitting doing your legitimate business, but somebody just did a transaction into your system, which you would have reported and you did not report. I can see in the chat, somebody asked, what is the penalty? If you go to section 15 of Money Laundering Prohibition Act, there is a lot of penalty for the offenses there in terms of not reporting a transaction. In fact, if the bank if we have a transaction that is almost 10 transactions in your bank, it can even run down a microfinance bank if you want to implement the sanctions. So these are things that are avoidable. Just report. Reporting does not mean you are reporting your customer. Just report that this is the transaction you see. That's all. If at the NFIU we look at it, sometimes we know that it is a legit distance, so we just allow it. But if there is anything suspicious, but the only major issue is whenever there is an investigation and it turns out that this transaction happened in your bank and there is no record that you have ever reported it, that is where it becomes an issue. You may be getting away with it, but when the chips are down and there is a investigation, that's where the thing will now be regret that you would have reported it. Thank you very much.
Thank you. You've kind of answered the question that I was going to ask you about sanctions. So that's helping me along very nicely. I have one final question for Dixon, for Helder, and that's hold on, let me just go to it. Where is it? Gone. Can Dixon's AML solution be used for mobile money and payments?
Yes, it can. Actually, it's very, very straightforward from our side. What we need to have is access to the information. So as long as we can connect to the core banking system or to any system that we have where you collect the information, either on the customers for KYC or the transactions for KYT, for us, it doesn't really matter if it's a mobile transfer or if it is, let's say, a traditional transfer or a wire transfer or whatever. We just need to have access to the transactions and then to evaluate transactions and even from there, evaluate behaviors. For some payment systems, we don't have access to the part and counterpart information, but we have the transaction itself. And based on that, we can also do some behavioral and analysis and take some conclusions from there. So the answer to your question, yes, it is. We can connect with no problem at all.
Thank you, Helder. I have one very quick question, and I think then that I'll hand back over to Saldis, and that's how are the microfinance banks registered for various types of registration, and how are these registrations different from the monthly NFIU reports? Now, who should I go to? I think that's the question again. Unfortunately, Mr. Jiya, Alhaji Jiya, you're very, very popular. So unfortunately, it's another one for you.
Yeah, what's the question again? Sorry.
Okay, go back to the question. How are the microfinance banks registered for the various type of registration, and how these registration different from the monthly NFIU reports?
Okay, I will share the link with, at the end of this, we have a GoML portal. All you need to do is just to go onto the portal. I'll share the URL, the link with maybe the association. So once you go onto the portal, you click on registration, you provide the details, it will come to us, FIU, then we will approve the registration. The essence of that is just to ensure that you are actually representing your microfinance bank. Sometimes we reach out, our compliance officers reach out to the reporting entity to ensure that, yes, you are actually either a money laundering reporting officer or chief compliance officer that is authorized to submit the report on behalf. So once that is once that is done, you're already on board. Anytime you have report, you upload. If you don't have, it's just, we need to just click on new report. You say from this month to this month, and it is a click, click, click. If you are to do the new report, it's even faster. You don't need to upload anything. You just need to say, after you log in, it comes up with your credentials. And all you need to specify is that between so week, that is so date to so date, no report. You submit, you are done. So if there is any reason they say no, you say yes, within that period, we didn't have any transaction that meets reporting threshold and this. So that is it. It's very simple and straightforward. We'll share the link. In fact, I will update my presentation and I'll put a page where you have that link so that anybody that has that presentation later, if you share it within your members, you can see the link where you can go there and the steps to register. Thank you.
Thank you very, very much. I'm going to hand back to Saldis. The questions have been really quite enlightening. We have a whole lot of series. So what we will do as part of our post webinar correspondence, we will issue the answers to the rest of the questions that we haven't had time for. So Saldis, thank you very much for giving me this opportunity to share some of the questions, and back to you.
Brilliant. Thank you very much indeed, Ruth. I can see already that there are so many questions in the Q&A and in the chats that we didn't get to. I have been tasked with giving the vote of thanks at this event. I want to start by thanking all our speakers for this honor that they have presented to us by being present here at this event and speaking so diligently and eloquently about their subject matters. I want to thank Alhaji Yusuf Ahmed Galesu because on the behalf of the NAMB for hosting us and for giving us this opportunity to bring NFIU and the microfinance banking sector, Dixon and ARMC all onto the same platform to talk about this significant nationally important issue for Nigeria. I want to extend my thanks to Mr. Shakil Caleb and Mr. Eddie O'Rourke at the NAMB Secretariat. They have been very instrumental in making sure that this event has gone on very well. I can share with you, Alhaji Yusuf, that there are over 100 people already on this call. And Mr. Eddie O'Rourke told us already there are people complaining that they could not get on. So it just shows the level of interest that the microfinance banking sector in Nigeria has in improving its approach and its commitment to risk management, regulatory compliance, and cybersecurity. And I think it is a good thing because when we have Mr. Alhaji Muhammad Jiya here from NFIU, he can see that the microfinance banking sector in Nigeria is not playing, that they're very interested in improving their risk management, regulatory compliance, and cybersecurity stance and approach. So I think it is a very, very good message from the sector to be given out to the regulator that this is where you stand. And this is a credit to the national executive and also to the secretariat of the NAMB. I want to thank Helda Karapina from Dixon. We hope that you, the members who have attended today, will reach out to us and we can arrange more demos for you to be able to look at the technology solutions that will help to overcome some of these challenges that you might face. We are very open to help you. So with no further ado, I also want to thank the planning team behind this event on the ARMC side and on the Dixia side with Ines and Ruth and Savero and others. We want to just share with you that we have a whole program of webinars like this. I don't know if they are going to be as exciting as this one with the presentations from Mr. Muhammad Jiya and others. Very exciting, very educational, but we hope that that is going to be the case. We are working with the NAMB, ARMC and the NAMB are working hand in hand, step by step. We have a whole host of webinars that are going to help to improve the knowledge and understanding of risk management, regulatory compliance, cybersecurity, IFRS 9 in terms of balance sheet, and including questions around recapitalization. How do we find capital for recapitalization efforts? So the NAMB is very serious about trying to get stuck into this area. And we at ARMC are working step by step with our older brothers at the NAMB to try to deliver this. With no further ado, we scheduled to do 1.5 hours. We have done 1.5 hours. So we want to thank you all very much for attending. We will share the video from this and the presentations from this webinar. We will share them all with the NAMB so that it can go out to the members. But once again, thank you very much indeed for all our speakers. Thank you very much indeed for our audience who have joined us. Thank you very much indeed to all of those who have participated in making this event such a well-attended and successful event. We pray that God stays with you in everything that you are doing for the rest of today and for the week. Thank you for attending and goodbye.
Thank you.
Thank you very much.
Thank you very much.
Thank you very much.
Bye. Well done.
Bye.
Thank you, sir. Thank you.